Hi, I'm Aura Ross with the Mulholland Ross Real Estate Group at realestatetoronto.com. And welcome to our newest version of Real Talk Live. And I want to thank you, thank those who joined us on our weekly calls through the last few months while we were kind of locked into our offices and homes. And we've been listening to your feedback. Thank you so much. We understand so many of you are going back to work, regular hours, regular things. So our 4 o'clock Thursday time isn't working so much for people right now. So again, thank you for your feedback. What we are trying to do now is bring you as much information in smaller bite-sized pieces, and we'll do that either weekly or bi-weekly as fast as we're getting the information. So now just watch for these emails. We're going to send them directly to you. And of course, in between emails, in between these reports, if you have any specific questions, general or specific, about your home, maybe a parent's home, maybe you're trying to help your kids figure this out, guys, we're helping people right across the board with all of this. So please feel free to call us. We're happy to help. And if we cannot help, we will be able to direct you to someone who can, whether it be in a different neighborhood or someone with a different skill set. Okay, so let's just jump in. It is July 2020, and wow, what a first half of the year we have seen. And so I want to just jump right in to show everyone a quick look at average home prices right across the Toronto Real Estate Board in an 11-year period. And I always love to talk about this because sometimes when we drill down in the week by week, the month by month, things can, we lose perspective. Okay, so anybody who has now owned their home for 10 years has doubled the value of their home, generally speaking. Of course, some areas we've seen this much higher. We haven't seen many areas where this actually is much lower. On average, in the GTA, this is not just Toronto, if you've owned your home for 10 years, you've doubled your money, more than doubled your money. What I want to actually look at too, I don't know if you can see my little hand cursor here, but we look at a trajectory, and when we follow the line up, you can see that our market is actually still sitting. I want to point with my finger, but I see you can't see that. We're actually still sitting well above what the trajectory was. And now look at this market too, between 2010 and say the 15, excuse me. You can just see these little bounces. These are your seasonal market adjustments, but the trajectory is always up. Then of course we hit 17, and wow, that was outside of a regular trajectory. So when people, and then of course we felt that drop, and people have been saying we just want the market to go back to where it should be type thing. Well, kind of, guys, if we just do that trajectory, we can see that 17 was the outlier, and today things are back to normal. What's a little surprising, though, I'm just going to drop to some numbers here. The average sale price in May was $878. Now, it's not showing up here because this is a different audited system. June's number came in at $930. So I just have to go back and go, when last did we see $930 at an average price point? And look at that. In April of 2017, the average hit $921. So when people today say now is not a good market to sell in, or real estate is no longer a good investment, I have to show this stuff. Okay. Now, let's take a look at a slightly closer look. This is, actually, sorry, I'm going to jump into a few different areas because I want to show you why we're seeing some different things going on. So I'm going to pick on C14. That includes your Willowdale East and Newtonbrook East. We're at Yonge and Sheppard, East Side. We saw this neighborhood really pick up in prices kind of right here. We saw this big jump between 14 and 16 in here. And then of course, there's your peak in 17. We saw some big prices. And then this is doing what we call the cat bounce, just like, and here's what we're seeing though in the numbers. Average price came in at $2,050,000. This is one of our more expensive neighborhoods in the north end of Toronto. But you can see we are still shy of our 217 peak of 2388. So this neighborhood, again, their average price point though is more than twice the price of the average price in the city of Toronto. And this becomes important to understand when we're looking at these city averages, or someone says to me, I'm moving from one area to the other area. They might find one area super hot and they're in bidding wars, and the other area, only 1 in 9 homes are selling. So this is where it's very important for when we say, please call us if you have specific information. I'll just stop on that because what upsets me sometimes is when I meet somebody who's gone off and they've just made a buy or they've just made a sell and they didn't know what the other side looked like. The agent who was helping them didn't show them, hey, if you buy or sell here and you still have to buy or sell there, this is what it's going to look like. Okay. So, let's just jump back. I want to just show you something. Detached C14, if you owned your home for 11 years, you saw 131% growth. Now that's to today, even like right to June, right? So this is actually May. So you're going from here to here and you're still seeing 131% growth. And yes, there was lots of peaks up here, but it's still been pretty darn good, hasn't it? This is what a closer look at a 2-year period in that same area. So there's was last year, and you can see what was starting to happen going into last fall. We were feeling it right across the yellow belt. We were feeling those numbers really punch up October, November, December. January started okay, but look at even before COVID, we saw that little drop in February. I would tell you this is your typical pattern. January to February typically goes up. In this area, we actually felt that dip January to February before there was any, shutting down of anything. Thought that's interesting. Again, we're sitting above where we were last year, though. So people saying, I don't think this is a good time to sell. This is actually a great time to sell. Want to show you, though, here's extreme opposite. We're working a lot in the Danforth. We sold the home just recently in the Guildwood, just east of the Danforth. Great area if you're looking for something under $1 million. It's still doable, close to the lake. Go train directly into the city. Love it. But let's look at E3, which includes your Danforth Village. It's basically Broadview going east above the Danforth, right? Now, check this out. They saw that bump in 17, right? They felt that little dip afterwards, but look at what it's been doing. A few cat bounces, but look at where we are. We're way above 17 now, partly because look at their price point, right? So it is an affordability thing. If you're questioning why some areas are selling more than others, we've got affordability and transportation, and those are our two big things that I think are affecting quite a bit of the market. Well, there's lots of others, but I mean, this is affecting our very local market. But look at what they've done this year. They started in January at $1,030,000. They saw that increase from January to February. Look at where their average is. If we're down here, look at these year averages. Look at 10 years ago, the average was $475,000. They've more than doubled. So if you've held your home in this neighborhood, you're at 138%. Now the city we said was at about 109. This area saw more growth than the average in the city. And it's still doing quite well. Let's take a look at what that looks like in a 2-year period. So again, where our more expensive neighborhoods saw January to February drop, look what happened in this neighborhood, January to February. Now we did feel that pullback. Remember, we all stayed home for a number of weeks, but May is taking off and June came in even higher. If anybody would like these graphs for their particular neighborhood, particular home style, particular anything, just let us know. We're happy to supply them as well as review them with you because it takes a little bit of time looking at the years and so on, going back and forth. Okay, hold on, let me just see if I can get here. This is the GTA again, average price homes right across the board. So there we were at the end of May. And again, I told you June is now 930. Now, if we pull our June 930, it's going to be like what? Right about here. That is well above where we saw in February. And it kind of wipes out the drop that we felt from the COVID virus. Because if we, again, just draw that line and go and all the way up, there's your trajectory line. Okay, so lots of things going on. Here's your detached homes. Average price, again, if you've held a home in the city of Toronto for 10, 11 years, you're at 131% on average. And take a look at what these have done. So, you know, one of the reasons why I like to always go back and look at this is, like I said, we've got a lot of people right now going, oh, the market's not very good. You know, I find it interesting that I hear this mostly from people who have lived in their homes for 30 plus years, which I find fascinating because, as you can see, in the long term, it's been phenomenal. Is it 2017? Well, in some areas, as we just witnessed, it's above what we saw in 2017. In most areas, and especially in our higher end homes, no, we're still a little below that 17 average, but we're actually not that far off, which actually also leads me to tell you that if you're selling your home in today's market and you're not getting viewings and you're not getting offers, and we are in one of the hottest markets we've seen in a while, and there isn't a lot for the buyers to choose from. At the risk of interfering with someone else's listing, if you were listed with another agent, we are probably talking about a price issue, right? So when everything's aligned up, what is the one thing that may stop some buyers from coming through? Something to think about, because it is not a bad market. Again, it changes from neighborhood to neighborhood, but even in that area I showed you, just jumping back into C14, you can see it's still not a bad market. And in fact, other than when we had the lockdown in March, we are above last year's prices. I don't want to keep going on about this because the market's great. But I will keep going on about it because I keep hearing people telling me it's not great. Here's the other really interesting piece. So our clients today are, I'm just going to stop this share for a moment. Our clients today are getting mortgages in the, we had someone yesterday lock in at 1.99% for 5-year closed. I've heard that as a low up to about 2.25, 5-year close. Now, when I first got in the business, not to age myself, it was 11 3/4. And at that time, I remember the agent saying, oh my gosh, you're so lucky because the rates have dropped. Can you imagine? So at 2%, I want to tell you just the difference of a 3.75% mortgage, which also is very low, to 2%. If you locked in $500,000 on a mortgage for 5 years, the difference of your monthly payments works out to about $400, 400 and change dollars. The amount difference you will pay over 5 years is $17,000. I know some people go, well, it doesn't really seem like that much, but think about it. Over 5 years, that's, you know, that's over $3,000 a year. That's how much less you've paid in interest, which means you've paid more towards your principal. Get this, at the end of 5 years, if you have a 3.75% mortgage and you made your payments, at the end of 5 years, you're refinancing $433,000. That's, you know, 5 years comes, you've paid your mortgage, and now you have $433 to finance. If you're at a 2% mortgage, at the end of the 5 years, you have a $418,000. So there's $15,000 savings right out of the gate. So again, you know, I'm kind of going into this because, again, even our buyers sometimes are saying, well, I want prices to drop more. And I'm going, well, hold on a minute. First of all, we're not seeing that right now. And second of all, the rates are dropping. And investors and buyers got to really look at those rates, because if you can lock in a 5-year rate at 2%, something tells me that's a pretty good thing. And if you can do that and you've brought your payments down by $400 a month, my best advice would be to make those payments. Those payments now go directly to principal. And on a 25-year mortgage, you're going to knock off years of spending. So when people talk about a purchase price, I'm talking sort of to the buyers now. When you talk about a purchase price, you're going to buy something for $1 million, just to keep numbers even. The cost of $1 million home can vary immensely depending on the interest rate of your mortgage. So much information. I know most people look at interest rates, purchase price, they make a decision. My biggest concern is there are people out there right now that could actually really win in a move. Right now, the cost of making a move up or down has actually been reduced quite a bit, right? You know, even just think about, we're talking about the rates. If you're bridging, those costs come down. Like, there's so many pieces to this that if you have a specific question about what will it cost me to make the move, please give us a call, because this is where we come in. Our goal always has been to provide you with the information that you need so you can make the best decisions for you and your family. And then, of course, follow up with the exceptional service to make it all happen, to do it as seamless as possible. And, of course, get you in your new place or out of your place or whatever it is you're trying to do ASAP. In the last 30 days, we've basically sold homes from Vaughan to the Guildwood. So if you're wondering if we service your area, please don't hesitate to call us. We are a team of professionals, and we are able to, we've got over 35 years experience, and we are able to assist you in most parts of the GTA. And again, I'll be very honest with you, if we don't feel we can properly service you, or we don't feel we're the best people to help you, we're going to let you know, and we're going to introduce you to the people that we think would be the best people to help you. So I hope today's Real Talk was a little bit helpful for those of you that are thinking about buying and selling. The big question I've been receiving in my email the last couple of weeks is, what do I think is going to happen this fall? What do we think is going to happen next year? And of course, it's an unknown. We are seeing a lot of things in the economy, though. We are seeing a lot of suggestions that we may see a fairly flat market for the next little while. It might be healthy for us to see it. Right now, we're feeling this bump up, but it's kind of a catch up to spring. Over the next few months, we might feel that level off. If the inventory of listings remains low, that might help push up those buyers, right? Little to choose from. Supply is low, demand is high. We feel the push up in price. If in the next few months we see a lot of listings come to market, which we might, because there's a lot of sellers going, hey, maybe the market isn't so bad, I'm going to give it a go. If we see a lot come to market and they're well priced, that might actually pull the price down. What we're noticing in some areas is there is a lot of inventory. However, half of it is what I call out of the market. It's just priced a little too high for the buyers to even consider it. And sorry about that. We are working. So those are things that, you know, these are the things we're seeing out in the market. I would tell you that we are seeing a lot of bidding wars. At the same time, we're seeing some of those condos downtown come down in price or sit on the market a little longer than they would have a year ago, which is telling me we're seeing some buying trend changes as well. We're going to watch that closely, because if you're buying and selling a condo to a house or a house to a condo, these are the things that become very important. So again, hope this was helpful. I'm Aura with the Mulholland Ross Group. We welcome your personal calls at 416-230-8500. Log on to realestatetoronto.com anytime for as much information as possible. You can also reach us directly through the site. You can drop into our office, 246 Shepherd Avenue West. We are now open. We do require masks inside. And we're here for you. Please share this with anyone you feel might have questions about buying or selling or investing in the Toronto and GTA area. We just referred a client out to Sarnia, Ontario. So if you have somebody or you yourself are thinking of leaving town completely, again, with 35 years in this business, we have a few friends out there. We have a nice network of professionals and we'd love to introduce you. So on that note, we'll see you in the neighborhood. We'll see you right across the GTA. And as always, please feel free to reach out to anyone on the team. We're the Mulholland Ross Group at realestatetoronto.com. 230-8500, that's 416. And have a great day. Stay safe, stay happy, and enjoy this beautiful heat.